everybody. Welcome to TraderMerlin Show. It is your Wednesday, Thomasina. You're back there on Tuesday still. It's okay. Tuesday was a great day. Today, if you're long, an even better day. Markets just continue to rip. As Big Eb says, more euphoria in the market today. Gotta love it. It just insane. It is really just insane. And it's going to keep on going until it stops. My guess is you got a little bit of time left before we start seeing some major sell-offs. But still keep on rallying. Uncharted territories. As my old colleague used to say, we're in uncharted territories, which leads to a thing called blue skies. And when you've got blue skies, there's nothing up there to slow it down. So I thought that was interesting on yesterday's show, how we looked at Brandon Wendell using Fibonacci to give some, I'm going to not say forecasting, but at least anticipate where this market may go to and turn. I know some people look at the Fibonacci stuff and think voodoo, smoke and mirrors, etc. Hey, you know what? If it works, it works. And it's not going to work all the time, but there certainly are times where I've used fibs, extensions, or retracements, and it comes right down to it and turns. I love using it in conjunction with other things as well. I did a bit of an experiment today, guys. I didn't do any social media posts for today's show just to see what the numbers would look like. So my guess is we're going to have a very lightly attended group. Of course, we got our regulars. So hello, Jorge and Terry, Big Eb, Thomasina. Good to have you. Gary as well. We got the regular crew in there. So good to have everybody with us. I'm going to do mainly Q&A today. I've got a bunch of questions that came in over the last 24 hours on a wide variety of topics, sprinkled in with some crypto stuff. So I'm sure Brendan is here. He's been talking about Polkadot a lot. So I had a chance to check out Polkadot, and we'll talk about that one as well as we progress. So let's just start things off with your overall Q&A. Here's the first one that came in from Joseph. He says, what do you think about Tesla's upcoming battery day? If you look at what our president has done, and don't start slamming me, be saying I'm about to go off on President Trump, because I'm not, but if you understand what he does, he uses very defined scripted tactics to create sensationalism, right? To create a buzz, whether it's a good buzz or a bad buzz. It's like the cliffhanger on an episode right before the commercial. He will create that type of buzz to elicit a wild reaction. Positive or negative doesn't matter, because as soon as you come back from commercial break, it's all resolved. He learned that on The Apprentice, and he uses that in political moves almost every single day. Elon Musk is right there with him. I mean, come on, the guy, when Tesla was I think it was $300, he said it was overvalued. It just hit $2,500 a share. I mean, come on. Okay, he split it. It hit $500 a share, times that by 5. So, but jump the shark, huh? Don't jump the sharks. Jumping sharks is dangerous. So if you look at what he's going to be doing, battery day, guys, Elon Musk has been alluding to the fact that he can basically double the capacity of battery power right now and storage in the next 3 years. That's kind of his estimate. Of course, saying things like that, I don't know if it can be done, but I love the fact that he may be able to. He seems to be one guy that tends to back up his word. The battery day is the 22nd, and I certainly do not short Tesla, guys, anywhere near that announcement. I think it's a dangerous thing to do, because if he does come out with an announcement and show, here's the normal battery, here's the battery we've created, it's got double the capacity, meaning in one little battery I can get you twice as far, this could not be a bigger game changer. I believe somebody was saying, the number I saw was, I forget the exact battery metric, I'm sure Big Ed probably knows more than I do, that I believe aircraft flight would be possible over 500 milliamps or megaamps or whatever the metric is. And that's what he's basically saying, that they could get to that level. All of a sudden you've got Tesla airplanes. That's a game changer. Now, I'm not saying that's what will be announced on the 22nd of September, but I certainly think that if you're trading Tesla stock, Tesla could have some crazy spikes up. And part of the move we're seeing now may actually be also in anticipation of some of that. If you look at the Robinhood charts, it's clear that the Robinhood traders have been just going stupidly gangbusters for Tesla. And I mentioned on Monday's show, I said, I'm pretty sure you're going to start to see Tesla sell off this week. I think some of you guys hopefully caught some of that move. It rebounded a little bit today near the end of the session, but earlier on, man, it was really ugly out there for Tesla. Here is the chart of TSLA, so you guys can see the last couple of days. Almost a 100-point swing in Tesla in 2 days. That's phenomenal. That's 20% swing. Great. This was to be expected. Generally, after splits, you do see shares sell off as people are starting to unload it, right? They had 1 share, now they've got 5. So all these Robinhood traders are maybe getting out of some, hopefully. So you generally see that happen. Now, the move on Tesla, look, I'm for one, I'm just staying away from it. I actually was thinking about buying puts on the open yesterday, but I just kind of shied away from it because it's a little too dangerous for me. Unfortunately, I would have been heftily rewarded on that one based off the sell-off, but oh well, I didn't do it. I'm kind of shying away from Tesla simply because I think it's a bit overextended. I think that it's just too volatile for me, and I don't want to have those kind of swings in my account. That said, September 22nd is battery day, so for those out there trading it, careful. It could vault it even much higher. You know, we talked about this on the show on Monday. A 1300 PE ratio, guys, is just unbelievable. It is just a crazy valuation. That basically means nobody cares what Tesla is doing now. Not at all. They could care less what they do. They could print anything and any numbers. Nobody cares. It's about expectations down the road. I think those expectations are way too lofty. But that's just my I think implied volatility Tesla would always be sky. Yeah, it is. Let's check that out since you brought that up. Surrender. I love the name, but don't surrender. Let me go to, I had an implied volatility chart up here, so let me just bring this up, and I'll bring it up for Tesla so you guys can check this out. Implied volatility is typically high with Tesla, right? I mean, you're looking at implied volatility, 52-week highs over 126%. Okay, great. Obviously that's significant. You look at some of this other numbers here. Here's your volatility chart. We'll bring that up. Sorry, I got Skype open here, and somebody is sending me something, so come on, where is my volatility chart? You can certainly see it's spiked up a little bit here recently, but it's not above historical volatility. It's not above 80%, or like just barely above 80% on that 30-day. So it's still high, but nowhere as high as it was back in March and April, which is crazy because it's just really just shot up here in price over the past couple weeks. So that's your implied volatility. I think the battery day will have a big impact on Tesla. I'd be very, very careful with that one. But anyway, one second. Just 1 second. Let me type in. Okay. So I had to get this one to send that message out there. Okay. Oh my God. Hopefully you guys can't hear that stupid little bloop, bloop every time they send it. It should be closed. All right. So that was question number 1, was the Tesla battery day. Gary, thank you so much. I appreciate that. You're gonna buy me a beer here soon. That's what that's for. All right, so battery day number 1. Obviously Tesla is gonna say, or Elon Musk will say something absolutely crazy, and it might be that he could never achieve that goal. Like he could say something like, "Well, right now we're averaging like 400 with our batteries. We're shooting for 1,000," and of course everyone is going to rush into that. And as Richard says, Musk is a smarter salesman than engineer, 100%. And that was why I was making that reference to what Trump does. Trump is a very, very good salesperson, or knows how to keep people on the hook. And Elon Musk is going to do that too. You think he's going to say something like, "Well, we're really failing miserably in our battery test and we're actually going backwards"? No, he's going to throw some crazy number out there and have some spectacle of an event. That's what we want, right? And that's what's going to happen. Yeah, cheap beer, I know. Okay, let's go to the next one. Full screen. You guys have questions, feel free to send those ones in also. We did that show yesterday with Brandon, which I thought was really interesting. In the years that I've traded with Brandon and worked with Brandon back on the old trading floor, Brandon's great. He's very systematic. He's methodical about what he does, and I love what he does. But normally I just don't usually see him in the crop space. So I really enjoyed that show yesterday with Brandon because it shows the diversity, not of just of his style, but his ability to look at something and say, you know what? Right now, this is going to present more opportunity for me. And we talked about grains and corn and wheat and soybeans and things like that. Casey sent in this question, which I thought was interesting. He says, how do you do this with crops, meaning anticipate the price of crop movements? He says the military-industrial complex engineers the weather. Let me start all over. The military-industrial complex engineers the weather, and our government is telling us to expect more deadly and disastrous weather. It's that old case of set them up for the worst and you won't be disappointed. Don't worry about what the government says. If you're a corn trader and you were looking at corn futures, something very simple. It's not that you have to be on top of everything, but there are certain things that are going to impact corn, like the derecho that went through Iowa. That was clear. People knew that was coming. Right? So what could we do? We could do something very simple. Let me show you a simple example here, Casey, of what you might want to do if you're a specific commodity trader like corn or wheat or soybeans. So I'm going to go out here and I went to Google. Simple. And I said, show me the top producing areas in the U.S. for corn. And you guys can see here we've got, I apologize for my geography. My geography days are a little bit rusty, I will say, but I'll do my best to get all these states for you. But you have Nebraska, you have South Dakota, you've got Minnesota, you've got Iowa, you've got Indiana, you've got really the big one when we look at the map. You can see this green belt right here. That's really where we're getting a bulk of our corn from. So Iowa, which is IA, right? That's 18. That's Iowa right here. I mean, that's pretty much where all the corn's coming from. So if you know that in Iowa and right next to it you've got Illinois, if you know that you are going to have a severe weather storm, so just pull up the Weather Channel or Weather Service and see what's forecast for those areas. If you see that there's a major storm going through there, which could devastate crops, pretty good bet that you're going to start to see the prices rise because, first off, the farmers know what's coming because they're watching this stuff and they're going to be buying futures contracts and that'll drive up the price because they need to hedge their crops. You'll see it happen a couple days after the event as well because it's not everyone's glued to that information. I, for one, was not watching corn when derecho hit because I'm not watching the weather patterns. But my friend who's from Iowa, not a farmer, he was telling me, he goes, oh man, we're about to get blasted by this derecho thing. And I'm like, I have no clue what you're talking about. So he explained it to me and I was thinking after the fact a couple days later, I'm like, well, shoot. I should have gone out there and bought corn because I know Iowa is like a major producer of it. And the chart doesn't lie. I mean, this is a massive production. You have this small little blip at the bottom of Iowa that doesn't produce corn. What's wrong with you? Just fill it all in, right? Somebody just missed it with the Sharpie. But that's one easy way for you to go and look and see what impacts what, right? When you look at corn, I could probably go out and pull up other things like orange juice and soybeans or other commodities that are traded. This, to me, would be something very simple that if I was a corn trader, that's what I'd be looking at and looking for the storms coming through. Musk haters are just jealous. Hey, I am too. I mean, I gotta admit, I got a little bit of envy for the guy, except the fact he's got like 6 kids and 4 wives, and one of them I can't even pronounce the name of his kid. I'm not envious about that, but hey, to each their own. So the gentleman's question that had that one earlier, that was for Casey. That's how you would be forecasting things. Don't worry about what people are telling you. Look at the actual weather coming through. If in fact you're using things like the weather, Don Fran, who was going to be on the program tomorrow, he sent me a message about the issues going on with coffee farmers and how they can't even get the laborers for it because of COVID, which could lead to a spike in coffee prices, which means that you might actually see a hit in the profits for Starbucks. So there's all these chain events that come from commodity prices, which I find very, very interesting. And maybe we'll touch on that tomorrow with Don Fran. I'm not sure which way we're going to go for that show, but we'll pick some topic to go into. All right, let me see. Elon, hey Tom, if he bores a tunnel to Musk, I'm taking it. I don't want to get an airplane, but I might take a tunnel. I'm not getting on that spaceship to Mars. I'm going to have to wait on that one. Okay, next question. Ken says, when's a good point to buy Overstock? This one's interesting, okay? I don't think there is a good point to buy Overstock. And again, I'm, in some cases, more risk averse than many of you, okay? More risk averse. So let's go to OSTK. Here's your Overstock for the last couple of days. I mean, just the price movement alone since March of this year should tell you that this thing's pretty damn dangerous. I mean, the moves are great. It moves 6% today, so there's obviously plenty of opportunity in this thing. But, where are you going to buy? If you're going off of classic supply and demand, let me see if I can just do some snap mode stuff here. If you're going off classic supply and demand, I mean, I'd like to break these things down further. I can't do snap on this one. It's not going to work. There we go. There is a zone. Oh my goodness, Merlin, what is going on? Stop this madness? There's your zone right there. That's the next stop. But honestly, I'm not interested. I just think it's too crazy of a security. I don't think that they've changed their business model that much to warrant being up 4,000% on the year. It's absurd to me. So I'm not a big fan of looking at Overstock as buying outright. What I would be interested in is looking at selling, because if we look at the implied volatility on Overstock, let me see if I can bring that one up. I'll bring up OSTK here. It's got pretty high volatility right now. Let me look that one up. It's taking forever over here. What's going on? Yeah, I thought about that one too, Mario. What about below that gap? There was a nice area. Look at the implied volatility. I mean, right now you're well over 100%. So this has got some pretty good volatility, certainly off of its peaks, but you're running over 100%. Great, right? There's some opportunity there to sell options. So maybe you're selling puts and collecting some premium and saying, all right, if it gets down to 60, what could I get if I sold the 60 puts? I haven't even looked at this yet, but let me just check it out. 50s look high probability. Yeah, I like the 60, actually. I like that closing gap. Maybe just a hair lower than that, but bear with me as I get my options chain up here. I should have had it all ready for you. Let me bring up that Overstock one just so we can see it. But that's how I would play it. I don't think I would be looking at buying the actual underlying. I would be looking for OSTK options. And as that loads up here for me, come on. I don't know why things are going so pathetically slow right now. It says I'm connected. Oh, how about I type in the right symbol, guys? OSTK. There we go. No wonder I'm like, what is going on? All right, so if I wanted to go for those 60 puts, you can go out here, 60 puts. You're only going to make $1.50, so it's not a lot of premium in it, but it's also $21 away. I mean, this thing would have to drop 25% to get down to the $60 mark. So you'd be buying at a pretty big discount, and that also, by the way, is for the one that's 15 days out. That's really not that bad. Oh, of course it's going to have a huge spread, Mario. Huge spread. I'm just kind of giving general references. So I'm hoping you guys see that. That's pretty good. If you go 15 days, so in 2 weeks, do you think it's going to go all the way down to 60? It might, and you could get paid $1.50 for it. Now, of course, if you go out longer term, you'd probably get a little bit more money for your risk, but that's how I'd be trading this one, Ken. I would not be buying it right now. I might be selling options and selling puts and maybe collecting some premium and buying it at lower prices. All right. Let's see. I'm trying to run through all these questions quick, guys, so I can get to the ones that you guys are running through in chat. All right, next one. This is from, oh no, there's Jeff. All right, Jeff sent in a whole bunch here. And you know, it kind of goes into the crypto discussion. I'll try to keep this one a bit brief, but Jeff says, I know I asked before on how to actually buy Bitcoin. When you review that, can you also explain how you would compare all the different cryptocurrencies out there? My wife keeps asking me, did you buy XRP yet? She's a Robinhooder, so buying XRP. Does she actually own Ripple or some derivative of Ripple? Okay, so if she actually bought XRP, she would own XRP. She would actually own physical Ripple. Then it would be stored over at Robinhood and however they're doing their storage, etc. So I brought this one up for you guys before, especially for those who haven't done it. I'll go to Coinbase, and then I'll go to Coinbase Pro, just so you guys can see both of these, because I have accounts at both of them. I'm not sure how much I have over at Coinbase, but for Jeff, if you basically just link this up to your account, and you link it up to a bank account. And for about 2 years, I was doing auto deposit. So it was just constantly putting in $1,200 a week into cryptocurrencies. I bought Bitcoin and Ethereum. That's where I've got most of my startup. Fortune's asking me to sign in. Let me see if I can sign in over here while you guys can't see it. There you go. Polka dot. Got all kinds of good stuff going on here. What's all these marketing stuff? Let's see. I want to go log in here so you guys can see this account. Bottom line is when you open this account, it's real simple. Now, I have to do two-factor authentication. It's going to take me a long time, and I don't want to waste it. When you go to sites like this, it will real easily let you just deposit money and go from there. It's just simple as buying a stock. You just have to fund the account. Obviously, when you do, make sure you do dual-factor authentication so you protect yourself. And I'll show you what it looks like right here. I may actually have some cash on hand in this account, and it's really, really, really simple. Let's see, I don't have any US dollars, so I got no dollars in this one. It's all in Bitcoin. But it would show right here, it says USDC. This is my cash equivalent in dollars. And I could go in here just like anything else and say buy. So there's no special way to buy this stuff, guys. You just have to have an account set up. So I could go out right now. I could actually set this up to my bank account, transfer over $5,000, $100, whatever you wanted, and start trading not just Bitcoin, but as you can see from this drop-down menu, I can trade a bunch of different currencies. And you see all this USD? That's basically dollars. So I could go buy Ethereum, I could buy Ripple, Litecoin, Bitcoin Cash, EOS, Dash, Orchid, Maker, Stellar. I mean, there's a whole bunch in here that you can buy with USD. All of this stuff could be purchased with US dollars. So it's that easy. You just have to, you might see my password, buddy. Good luck with that one. But there you go. That's the Coinbase Pro. Jeff, it's actually really simple. I would encourage you, for those of you who are skeptics, just put a little bit of money in there. Even if it's just $100, just to have some skin in the game. The beautiful thing about cryptocurrencies, You don't have to buy a full share. You don't have to go out there and buy a full Bitcoin trading at $1,100, right? You can buy one Satoshi. And I know that there's probably 3 or 4 people here who know what a Satoshi is. It's 7 decimal places. So it's 0.0000001 Bitcoin. That's like 1/1000th of a penny. You can buy any increment. So it's to me, it's one of those things where you just put $100 in there and just get involved with it a little bit so you can have some skin in the game. What happens is organically, if you bought some Bitcoin, you're going to start doing more research on Bitcoin. You're going to start studying a little bit more, and you'll start to really get immersed into the whole crypto and technology space, which leads me to the second part here, which I'm sure Brendan is excited about and been wanting me to add some thoughts on this one, which is a program called Polkadot. One of the major problems you have with cryptocurrencies is they're kind of in their own little ecosystem, right? You have blockchains for a wide variety of different projects, right? So you have the Bitcoin blockchain, you have the Ethereum blockchain, you have all these different blockchains. And in the vast majority of the cases, they're not interoperable. They don't communicate with each other. So if you're trying to do a transaction on Bitcoin and maybe you want to convert something over into Ethereum, it's not going to happen. So it's always been this thought of, well, how can we do cross-chain transactions? How can we link those chains so that things become much more efficient? And Polkadot, which is the one that Brendan's been talking about, from what I've seen, looks like they're actually doing just that. Basically creating call it an internet for blockchains. So if you need to do work on blockchains, you would actually connect through Polkadot, and because it's all kind of centralized through their hub, you would now have access to all those blockchains. So you could do transactions on different blockchains, you could swap on different blockchains. It makes it much faster, more efficient from a development perspective. Also, if you're starting up a new project, they actually have like kind of a template blockchain that you could use and just kind of plug right into. So it's really making it easy for people to get started on their own blockchains and decentralized database management. So to me, sounds like a great project. I want to dive deeper into it to see exactly what the potential is. But one of the guys who started it, where did he come from? He used to be the right-hand man at Ethereum. So clearly, he knows the technology of Ethereum and how you can plug into Ethereum and connect that to the Polkadot chain, etc. So these are the types of things you have to pay attention to when you're looking at that crypto space. And I think that's the second part of Jeff's question here is, how would you compare all the different cryptocurrencies out there? You really can't. You know what I mean? It's kind of like walking through the produce department and saying, how can you compare an apple to broccoli? Well, what apple? Is it a Fuji? Is it a Golden Delicious? I mean, every project is different. So I'll just kind of say it here. You have 3 broad categories, and I might have to change that, and if I was to sit a little bit longer and think about it, but number 1 category in crypto for me is the store of value, which I'll call digital gold, which I'm going to just call Bitcoin. Bitcoin is that the forefront in that category. Great securities and all kinds of features. We can go on and on about why Bitcoin is probably the best one out there overall. Then it goes down to, what are you looking for? Are you just looking for something to catch a big winner on? Or are you looking for something that's going to eventually become a mainstay of society? Are you looking to find that Amazon, when it was selling books back in the 90s, and say, you know what, that's the company that will be doing everything on the planet in 20 years, right? I'm more interested in that when I'm acquiring or building a portfolio for the crypto stuff. So there are different phases. For example, you have generation 1 is Bitcoin, right? That's it, started all. Generation 2 was where the blockchain was programmable. Ethereum took the lead there, right? Ethereum was absolutely it with programmability. Problem with Ethereum is it's lagging behind in scalability, because as these projects become more accepted, these decentralized applications, more people are going to try to use the Ethereum network, and it just can't handle the number of transactions. So they're doing a whole bunch of upgrades to the network and sharding and all sorts of other pieces, which we won't get into now, to help make transactions faster and the system more robust. Now you enter in level 2, which is companies that are already starting out with scalability in mind. First thought is scalability in transactions. And one of the ones I mentioned many times has been EOS. EOS is doing tons of transactions. Let me see if I can find Blocktivity. I think it's blocktivity.info. It's been a long time since I used this site, but this is a cool one. It would show you kind of the top chains out there and who's doing the most transactions right now. So if you're looking for something that might be the next Visa card, right, and doing, I think I got it, there it is. then you might want something that's doing a lot of transactions, because clearly Bitcoin and Ethereum won't be anywhere up to speed with transactions like Visa, right? They're just not going to compete. They just can't. So let me show you Blocktivity here real quick. Ooh, what happened? So here you go. This is actually really good. I don't know, the page looks different to me, but Blocktivity will tell you kind of what the transaction times look like. And look at the amount of activity on the network. Okay, EOS is the #1 most transacted out there. And it's weird. This page looks different. Let me see if I refresh this. It used to show you, there we go, how bogged down the system is. And I thought that was really cool. Here's Bitcoin, right? Bitcoin did 900,000 transactions in the last 24 hours. EOS did 65 million. Nothing even comes close to it. Their record is 115 million transactions. Now, I don't know all the details behind those transactions, but if EOS can get out there, they are clearly the one that's got the scalability with regard to transactions. So, of course, part of my portfolio is in EOS. I also have Stellar Lumens, which is XLM on there. I have TRX, which is Tron. So I have a few of these. Ethereum is down here at number 8, Bitcoin number 9. So I've been adding in many of these into my portfolio, hoping to get into that next runner, if you will, the one that's going to take it to the next level. So when you ask me to compare them all, you can't. I mean, there are literally thousands of projects out there. I mean, if you look at Polkadot, for example, it's an ambitious project. It's obviously very difficult because you have to figure out the interoperability between all these different chains, which are not in the same programming language. So there's a challenge there. I don't know how they're going to overcome all that. We'll see down the road. Binance. Dude, Binance, I think. Binance is the only one in here I'm really upset that I do not own. Let me see BNB. Let's go to WorldCoin Index. Yeah, that one bothers me. I've actually been wanting to buy Binance. I just have not done it. I've been so preoccupied with other stuff. BNB is the Binance coin. It should be, there it is, Binance coin, number 19. BNB is an interesting story. It's the Binance coin, and I like what Binance is doing. Binance is just, if you follow the news, they are building and building and building and building their infrastructure and getting bigger and more powerful. I mean, at a certain point, I think exchanges around the world, talking like New York Stock Exchange and NASDAQ, are going to have to look at Binance and go, they're a threat. I mean, now all of a sudden you're seeing derivative products on there and options, and maybe there'll be some future type stuff. I mean, it's crazy what Binance is doing, and it's just getting bigger and bigger, and their coin has done very, very well. Yeah, I know. I kind of dropped out of it a little bit myself, Medic. But here is your Binance. Let's go back to last year just to see what it's done. So, I mean, it's had a pretty nice rally. It's up 150% since those lows in March. Not a bad move. But again, do you put all your eggs in that basket? For Jeff, who was asking about how do you break them all down, you can't look at the BNB coin and think it's the same thing as Ripple, right? I for one, and for the crowd that's here, I know some of you are into cryptos. How many were positive on Ripple? And if you are positive on Ripple, why? Okay, why are you positive on it? Because I, for one, am not that positive on it, and I can explain why. I think I've shown you guys this in the past. I'll go back here to WorldCoin Index and show you the outstanding number of Ripple that are out there is 100 billion. And if you look right here, in circulation is only 45 billion. What that tells me that there is 55 billion Ripple sitting at the parent company. So if at any moment those guys decided to unload those 55 billion, they're already mined, right? They just were produced. It's a totally different system than like Ethereum Ethereum and Bitcoin that have an emission curve, right? Where they're creating some as time goes on, and that creation gets slower and slower because at that point, in theory, demand would be much higher. So I don't know. I just don't see Ripple taking the lead charge of being the central bank money. They're going to create their own Fed coin, and they won't need Ripple. So all this hoopla and excitement, which I was wrapped up in, I actually thought Ripple would be the Fed's go-to, right? Why not? Well, they're just going to create their own, one that they control, one that they can manipulate. So there we go. Yeah, and Medic says, no, the supply is too large. And I think that's it. It's not necessarily that the supply is too large. I mean, 100 billion is just crazy. It's just the fact that over half of it is still held by the parent company. So if that guy decides to unload some of it, this thing's crashing. Totally crashing down. Brendan brings up a good point. He says, I hold a small amount of XRP, which is Ripple, because I think Ripple Labs will evolve into something much bigger. And there we're in agreement. And when they have that much money, right, now you have money to create good projects, Question is, are they going to create projects that are worthy, that will sustain and push that XRP token value higher? I don't know. I saw you mentioned there that Tron is crap. Well, it might be. Justin's son is a go-getter, and he's got billions of dollars right now. So if you gave me billions of dollars and I told you I was going to build something and I had billions of dollars to do it, I'm going to find a way to do that. I have that luxury because I've got capital behind me. So, I'll never say that somebody can't do something when they got billions of dollars behind them. Yeah, Justin's son is definitely an odd duck. Tron is an odd duck too. I didn't really like the project when it came out, but I have a bunch of it. I don't know how much exactly. I think I've got 30 or 40,000 Tron, but I bought it at a cheap price, like 4 cents or something. So what's it at now? 3.5. There you go. All right, so there's your crypto piece. I'll have to dig a little bit deeper into, there's Chainlink and also Polkadot, which are kind of in the similar space. Chainlink is the leader right now, but Polkadot was a very interesting project. Certainly one I think I'll add to my portfolio. So thanks for bringing that to my attention, Brendan. I do appreciate that. Okay, back to listener questions. Where's my clock? Whoo, time is flying. I had it up here. All right. This is one I think I need to have another futures guy on with me, because he says, can you shed some more light on your next show on the scenario where you hit price limit, especially commodities with different trading hours than regular, and how do you manage that trade? Well, bottom line is, when you're in there, there's a couple different ways that it happens. So let's say you're in something and it goes lock limit up, meaning that price is just shot straight up. Hopefully you're long, not short. And it rallies straight up, and all of a sudden, everything freezes on your futures trading platform. What will happen is exchanges will not allow it to trade anything higher than that line in the sand, usually till the next trading session. So it'll literally just freeze until the next trading session. Now, depending on the rules, some will freeze trading altogether. Others will allow it to trade only lower, right? It still can't go above that ceiling that's established from the lock, but it can trade lower than that. That's normally what happens with like an S&P 500 lock limit down that we saw back in February, right? We were lock limit down and we just hold it there until 6:30 in the morning. That's a fixed lock that cannot trade down below that price. So if you're short and it goes lock limit down, in my opinion, I would probably cover, right? If it depends on the time that you do it, if you're long and you're buying at the lock limit down, your risk is 0 right now. But if that market still opens up lock limit down at 6:30 in the morning Pacific time, you're now in trouble. And that happened a couple times in lock limits this year. 09 is when the paper was out. Yeah, 08, 09, somewhere in there. It's a long time ago. So I thought it was February 09, but I could be mistaken. I got too many numbers in my head, sorry. So, when you're looking at the lock limits, you need to know the specific ones for each commodity that you're trading, because it will be different from contract to contract, also indexes. But generally what will happen is there's a lock limit for a certain period of time. During regular market hours, it may be different than the extended hours or after hours markets, right? At the futures markets, if it hits lock limit down in the after hour or pre-market, it'll just stay there until the market's open, right? It's 5% drop down. From there, it goes to 7, then 13, then 21, and 21 is just done for the day, and they freeze it till the next session. So you got to know each of those different lock limits. And Matt says, what can you do? Really nothing. If they let you get out, that's probably advisable just to get out of your position, because you never know what can happen. A lot of times when you have a lock limit, especially with the commodity spaces, it's inclined to jump to the next lock limit, right? Because commodities move very, very quickly. All right, I had a huge stack of questions here from other people, so let me see if I can get through some of those while I'm still got time. What kind of commissions are there with cryptos? Alan, it depends from brokerage firm to brokerage firm. I believe I think I had it up there when I was looking at Coinbase Pro. The commissions are rather cheap. It's a 0.5 percentage point. Let's see if I had it up there. I think I may have closed it out already. It's a 0.5%. If you go to Coinbase, it's like 1.5 or 2%. You're like, wait a minute, I'm buying the same thing. One's just at Coinbase, one's at Coinbase Pro. Coinbase is really like the gateway. It's the very beginner market for people to get into cryptos. The fees are much higher. It's just simple click, right? If you go to Coinbase Pro, you have to think a little bit. All right, am I doing limit? Am I doing market? Where am I buying at? When you buy on Coinbase, you're always paying market, so you're already paying higher and you're paying more fees, which is why I tell people do not start out on Coinbase. Start out on Coinbase Pro. What else do I got? Sorry, I'm just scrolling through questions. I don't know if Tron looks healthy. Coach says Tron chart looks healthy. Again, I think it goes back to the billions of dollars backing the project. I'm not a big fan of Tron's project per se, but they're already doing something that they should be doing with the money, which is exactly what Facebook did with their money. What did Facebook do? Facebook went out and bought all sorts of competing pieces, right? They went and bought Instagram. So all of a sudden people are like, oh, Facebook sucks. I'm going to go use Instagram now. You're still using Facebook, people. So Justin Sun went out there and bought other pieces, other components with the money that he got from Tron. And, to me, that makes it a little bit more valid. But, the project itself it's a little shaky, I will say. What else do I got? All right. It does make it a little bit interesting. And Alan, you can actually get much cheaper by going to different exchanges. Brendan, you might know, I haven't traded on Binance in a while, but I think Binance is like 0.1%, right? So you're talking 0.1%. It depends on the pairs or the currency you're trading, but much lower on Binance. Binance is one of the cheapest out there, which is probably why they've become so popular and have a bulk of the trading volume in the space. All right, what else do I got? Let's do this one. Why not? I got time. No problem. And keep the questions coming, guys. I apologize if I'm kind of bouncing around here. I just wanted to make it an all question day. Yep, BitTorrent, right? He owns BitTorrent as well. All right, Jeff says, can you discuss the big picture in terms of the market? I'm so confused thinking that the market should be down because there was such a disruption in the supply of raw materials. That's why you can't find bikes at Walmart or canoes at Dick's. Because of this shortage, is the bad earnings going to be later this year? Kids aren't going out to shop for school clothes because they're all virtual. They don't need all the same school supplies. Seems like you would line up with the election. Discuss how this might play. We had an interview with John O'Donnell, and I cannot remember the name. It was a real bigwig. I cannot remember his name though. Unfortunately, I don't remember all these guys. Robert Woods. I don't remember. That's an actor, isn't it? I don't know. Woods. Anyway, we were talking about job disruption and how we're seeing this interesting phenomenon where we're seeing job destruction. I mean, massive job loss, right? Ever since 2008 crash, a lot of people were laid off, and the jobs that they got were nowhere near paying the same. And the argument that was made was, he kept saying the jobs will come. The jobs will come. And your point here is interesting because you're right. We are seeing supply chain disruptions, which is why you cannot buy weight equipment, which is why I've 3D printed 180 pounds worth of weights, guys. I built my own gym in my garage here because, I just had plenty of free time and I like to make things. So all those supplies I would normally have bought. Instead, I had to make everything because the supply chain is disrupted. The consumption will come. Just like the argument that the jobs will come from somewhere else. No, it was not Dr. Wood. He was an economist, a really big name, and I just drawn a blank. The jobs will come from somewhere else, and new jobs were created. Basically, the argument here is, you said kids are not going to school, they don't need the same clothes, but what do they need now? They need computers. They need your headphones. They need laptops. So what companies have done really well? Amazon, Best Buy, Walmart, right? These companies have online presence, especially selling electronics, are booming right now because every kid in America that wants to go to school and connect with Zoom has to get a laptop or some computer that the family may have already had, but of course all kids want their own laptop, right? So we can do things and parents don't get to watch us. So it's just, the consumption's just going to come in different areas. Now, it's interesting you say, are earnings going to get much worse, right? Is it in the next quarter? What happened is all these companies lowered their earnings forecast because they knew COVID was going to be so bad. So while it was kind of like pulling the blanket out from underneath us, because now the obstacle to jump over is much better. For example, Macy's today. Macy's, I think, was expected to lose $1.70 something per share, right? That was the forecast. Well, they lost 80. They're losing money, right? They're losing badly. But because it was a big beat, Macy's saw a nice pop to the upside today. So when you lower your expectations so bad, there's so many bad analogies I could make right now. I'm going to probably, I don't want to make these analogies. I'll start getting some hate mail from you guys. But, when you set your bar so low that you could basically just walk over it without any impediment, then you're going to beat earnings. So this supply chain stuff, this disruption is just coming in different forms. We're finding other ways to buy, which is why specific companies have just been absolutely going gangbusters and moving to the upside. It's been great. I mean, if you're long those specific markets, like Overstock was nuts. All right, one more. Okay, I'm interested in investing in some real estate, but just wondering what I can buy as a hedge for potential large-scale downturns just across all markets. Is there a real estate ETF or builder stock that you would recommend to me? No, I don't want to get in the business of making recommendations because that becomes litigious. Although I am speaking one too many, so legally I can say whatever I want. Bottom line is you want to do research for yourself. And it's a great question, Suraj. At a certain point, when we start to see these rates go back up, you had Bill Addis on the program last week talking about how he thinks rates are going to start to go up. We're already starting to see it a little bit. If that 10-year starts to spike, you guys won't be able to refinance like you did. You won't be able to get access to capital like we did before. So that means that the housing market, real estate market could take a dump. Are there areas that might get hit worse than others, right? Do you think that malls might be getting crushed versus residential real estate or commercial real estate might be getting hit? I think commercial is probably the next one to really have a pain point. So what I would do, Suraj, if I was you, is I would bring up something like this. Let me bring it up for you. I actually really like ETFDB.com. It's a great website if you want to look at exchange-traded funds and how they stack up. And I just typed in real estate ETFs just to give you an idea. This is by no means all of them. One of the main factors I'm going to look for in filtering is this right here. I'm going to sort by average daily volume. One main criteria here is I want to make sure I have liquidity. So you notice there's IYR, there's VNQ, XLRE, all of these, over almost 5 million shares a day. Plenty of liquidity out there in those specific ETFs for you to trade. What's unique about this is some of these might be real estate investment trusts. Some might actually be buying real estate companies like your Toll Brothers, your Lennars, like your KB Homes, things like that. So there's a lot of different ways you could play this, Suraj. There's some down in here where you'll look, it says infrastructure real estates, there is mortgage income REITs in ETFs. So it's all across the board which sector you want to get into. I do think you might look at one more in commercial real estate. As being maybe the next shoe to drop here, and as we've proven the model right now that many people can work from home. As I mentioned before, I used to have a multi-million-dollar studio, and I would say that the caliber of production of this show and stability, granted I don't have a big old set here, but I can do pretty much the exact same thing. If I wanted to, I could add in 5 different cameras and different shots, but technology has shown us we can now work from home. So I think you'll see malls and commercial real estate take the next big hit. I'm sure, Sheena, you got some thoughts on that one, right? Who's going to be next? I don't think residential is going to get hit too hard. I think residential will be okay. Might get hit, but... Yes, REITs are real estate investment trusts. They're a little bit of a different animal. You got to do your research on those. Some actually have very high fees, so I'd be careful on some of those REITs. There's different rules together and tax rules as well with some of the different REITs out there. All right, what did I say? Thanks to Overstock. Made some good money on the... Yeah. Yes. Good. Gretchen, I hope you were short or bought some puts on Overstock. Absolutely. That's a heck of a move. Yes, Real Estate Investment Trust is what REIT stands for. So that's what I would say, Suraj. Check out those ETFs, and you could basically go short those. There are some inverse leverage ETFs, but I wouldn't go that route. I would just go to the one-to-ones and just sell short some of those ETFs. There's plenty of opportunity in those ETFs I showed you. You'll notice once I got near the bottom of that list, though, that some of these have really low volumes, right? The highlighted column here is volume. Well, this guy down here, this S&P 500 equal weighted real estate index, trades 5,000 shares a day. Forget it. Move on. Move on to something else. There's only $18,000 in it. That can't be right. It's got to be 18 million. That's it? Wow. Okay. Well, that seems like very, very little. VNQ is probably one of the more popular, bigger ones. The brands on the pump for the VR worlds. I can achieve my dream of never leaving the house. You introvert, Brendan. Get out and enjoy the sunshine. You Canadians. Eh? Okay, type any last minute questions you guys got. I'm going to try to go to your economic calendar here and wrap things up. I'll scroll through real quick just to see if I have any other last minute questions that came through or questions that came through. I saw some earlier that I know I didn't get to, so I apologize for that, guys. It's a little difficult for me doing 4 or 5 different things. Big Eb says, with Friday's labor report, with the way things are going, does market go up regardless? I'm kind of feeling it does. Right now it just feels like there's this unbridled optimism for everything. And if we get down below 9.8% on the unemployment rate on Friday, which is the expectation, I think that'll usher. It's weird. It's a double-edged sword, right? If we get down below 9.8, in theory, you'd think the mass market would be like, oh, okay, great, good, we're getting back to normal, and buy it up. You take the flip side of that, and the other argument would be, well, you know what? If we're dropping quick enough here, that might mean that the Fed and the government will back off on stimulus because we're aggressively heading back towards where we were. So you kind of got to balance those two expectations out. In theory, you would think it was most likely to be going up, just because everyone seems to be, embracing any piece of good news. All right. I don't have any other questions here that I can get to. Last minute, you guys type any in? Did you see anyone? Still time to get long VIX calls? You could. Let's take a peek at the old VIX. I don't know if I get it on this one application here. Let me see real quick if I can pull up the VIX for you guys. Give you a little visual on the VIX because I don't have it on my TradeStation. Let's go VIX. Come on. Slow but sure is this platform. Oops. All right, so there you go. Let me bring up the VIX. And you guys see right now, VIX. Didn't even want to bring it up. Interesting. There we go, 26. 26 is still not that low, right? It's still, normally the old numbers used to be between 20 and 40, telling you if it's overbought versus oversold. So nice to see that back in February we're up at about 84 again. That's a nice vault up. But, you could be going long VIX right now. Basically, it sells there's a little bit more fear selling into the market. As that VIX starts to rise, guys, that means that people are buying puts for protection. The market ripped through to all-time highs again today by another 1+%. So a huge move up. We will see if that ends up holding. But right now, it looks like some people are buying some protection to the downside here on our overall markets. I don't mind hedging. I got no problem. Correct, Mario. Non-farm employment change, there was really no impact on today. Right? It was, look, if you look at the S&P 500 here, I'll bring up both of them. So let's go 5 minute and change the interval to a 5. Obviously we were up pretty much all day, right? And when we look at the, there we go. When you look at the numbers that came out for ADP non-farm employment change, your actual was 428,000. And that is a pretty big difference compared to the expectations, right? They were expecting it to be 1.2 million non-farm employment change, meaning a ton of jobs created. So I'll bring it. I'll read it to you. Previous number was 212,000. That was the previous week or previous month. Excuse me. They expected it to increase by 1 million, meaning a ton more people got jobs. Well, it came out at 400,000. So we missed the expectation by 800,000, but we beat the previous number by 200,000. So does it go up or does it go down? That's the situation I think we found ourselves in today. And I think that it was just basically people just riding this train of euphoria because you have nothing above us that will really stop this market from moving. There we go. Okay, hedging is for losers. Hey, if you're making money on it, that's all that matters. Hedging is a great way to make money, especially when these things come crashing. And I assure you, at some point, you're going to see some moves that will look like the February moves, and you're going, oh my gosh, I wish I was short. But we weren't. All right, let me show you economic calendar for tomorrow so I can wrap this one up here. Got a lot of stuff to do. Tomorrow, you have these economic announcements. For the U.S., you have unemployment claims, which is expected to get sub 1 million again. You have non-farm productivity, labor costs, trade balance, and final services PMI for the U.S. So quite a few pieces of information. Other than that, you've got retail sales coming out for the euro as well as Australia. German factory orders as well. Our guest for the show tomorrow, I've been fighting and trying forever to get this guy on the program. We're going to have Larry Jacobson on the show. He was one of the maiden guests when I did this show back in February, right as we had to shut down Power Trading Radio. So it was great to have him back on then. But he hasn't been on since. Larry will be on tomorrow's show. Not sure what we want to talk about, so you guys feel free to steer that conversation. And then just so you guys can plan your schedules next week, I will probably not be doing a Friday show, nor will I be doing a Monday show. Just why? Because I'm taking time off. Well, Monday is a holiday anyway, but the week after that I'll be gone. I'm going to be headed to the East Coast, so I won't be doing the show Friday or on Monday. There you go. And by the way, Gary, thank you. You were bugging me, and I mean that in a good way, bugging me to get John O. I actually worked out with John O'Donnell. John O'Donnell will be on Tuesday's show, so when we come back from our holiday weekend, John will be our guest. I'm pretty excited to have him on the program. It's been quite some time. Again, if you have questions on topics or things you want me to talk about, do me a favor, send it on in. You guys know how to do it by now. You simply go to TraderMerlin.com. You can send in anything there. I'd love to have all your questions. If you got charts or something you want to show me, send it in there. Of course, you can always just post them down below the video on our YouTube channel. So hit that like button. Hope you guys enjoyed today's show, even though it was a free-form random mix. I look forward to seeing you guys tomorrow with Larry Jacobson on the show. That'll do it, guys. See you tomorrow.